Hello friends, today we are going to learn financial services same 3 SYBB. I am Assistant Professor Sri Rajpur. Let's go through with introduction to the money market instruments. So short term borrowings and lending, it is deals with the from 1 day to the 1 month to 6 months to the 1 year. So short term borrowings and lendings are deals with money market. It's high liquidity and low risk because within 1 year you will get your money back. Next is key participants. So government, banks and corporations are dealing with this money market instruments. So first option or instrument is called as treasury bill. In short form it is called as T-bills. It is short term government securities. It is issued at discount, redeemed at face value. Means it is issued at rupees 19 or 95 and you will get back your money with face value rupees 100. So 5 rupees is beneficial for the investor. So tenure, generally short term government securities in case of treasury bills are for 91 days, 182 days, then 364 days. This type of short duration is available. Means from 3 months to 1 year duration is there, and no interest payment, so zero coupon facility is there. So this is called as treasury bill used for the short term investment. Next is commercial papers. It is also called as CPs. It is unsecured short term promissory note. It is not secured, that's what it is called as unsecured short term promissory notes, issued by corporations to meet working capital needs. It is useful for companies to fulfill their requirement from 1 month to 1 year. Maturity period is there for 7 days or up to 1 year. This is also for a short period of time and higher yield than T-bills and slightly higher risk is there. Next option is certificate of deposit, CDs. So time deposit issued by the bank. It is like deposit, fixed deposit, then higher rate of interest than saving account. So rate of interest is high, so it is beneficial from the point of view of investor to get high amount of interest rates. Tradable in the secondary market also, and the maturity period for this certificate of deposits are 7 days to 1 year for banks. Let's go for next option, that is repurchase agreements. It is called as repos. So this is short term borrowings for dealers in government securities. It is sale of securities with agreement to repurchase and maturities. So overnight to a few weeks, for 24 hours, 48 hours and up to the few weeks we can deal with these repurchase agreements and use for the rising short term capitals. Next is bankers acceptances, that is called as BAs. So time drafts guaranteed by the banks. It is useful for banks to get amount in the short period of time. It is used in the international trade transactions, and maturity period for this is minimum 30 days to 180 days, from 1 month to around 4 to 5 months duration is there, and it is tradable before maturity period. This is option that bankers accept us. Next is call money and notice money. So call money and loans repayable on demand. So it is there for 1 day, very short period of time. So generally all the banks are dealing with call money. Then notice money, loans with a notice period of 2 to 14 days. In this notice money also banks are deals with this, and it is used by a bank to manage the liquidity of their bank. So all the banks are required to maintain their liquidity ratio. So for that purpose, for very short period of time, they used to issue call money and notice money. So what are the features of money market instrument? First is high liquidity. It is possible for any investor to convert his investment into cash. So this is called as high liquidity. Low default risk. So it is quite impossible for any investor to get loss in short term duration, because in long term we are having market will change, the competition will change, but in case of low and very short period of time, the default chances are very less, so risk is also low. Then short maturity, within 1 year we can convert our amount assets into the cash. So this is short maturity and attractive for short term investors. So those who are interested to get their money back within 1 year,